Fed will cut interest rates next week despite rising inflation. Let's check it out. Yeah, I've been loading my bags up, man. I've got, I know people are gonna call me crazy, whatnot. But I like to live on edge. Not always. I'm very deliberate about what I do, but I got like 100K in crypto. No biggie, some slight, really get my nips perky while I wait for make all this money. Let's check this out, man. What is wrong? Something has been going on with my mouse and it is just pissing me off.
In today's video, we're covering the CPI inflation report. So here's the situation. CPI headline inflation came in at 2.9% and CPI core inflation came in at 3.1%. Okay, so how does this impact the whole situation when it comes to the Federal Reserve cutting interest rates? So the first thing that you need to know is that the rate of inflation is accelerating, at least for headline inflation. Headline inflation rose from 2.7% the prior month to 2.9%. Core inflation remained unchanged at 3.1%. Okay, the Federal Reserve, they're trying to get inflation down to 2.0%. However, regardless of whether you're looking at headline inflation or core inflation, and if you think about it, they're both above 2%, like well above 2%. And as you can see, the rates of inflation, they bottomed in April, and since then they've been accelerating. But here's the situation. Even though the rate of inflation is accelerating, the Federal Reserve is still most likely going to cut interest rates at their next meeting, which is going to be on September 17th, which is next week. So the logic is, it's two things, the reason why they're still going to cut. So the first thing is that they believe that the inflation situation is still under control. They believe that this acceleration will be temporary or, their favor.
If you're in the cryptocurrency market, I'm going to give you an insider tip. All right. When they cut interest rates on September 17th, it's going to pump Bitcoin substantially. Then we'll probably fizzle out. Will go down. Things will still pump, but basically what I'm saying is we're gonna have 3 waves. September rate cut, October rate cut, December rate cut. And at the December rate cut, I would sell my crypto no later than December 15th. This at this point will be the very dangerous zone, because at this point this is where everybody's going to be exiting to make as much profit. Now, if you wait too long, either you're going to sell in January and you're going to face a huge dump and you're not going to make any profits, or you're going to sell at the end of December and you're going to lose massive profits. Wait until the very end. So if you do have crypto or stocks, well, really you shouldn't really. I really wouldn't sell any stocks. But I mean, you could if you want to. This also applies. You're going to see a huge pump in a couple of days. You're going to see another pump in October. You're going to see another pump in December. Now, if you're good, you could buy, you could sell at the top, buy back in, but really all you need to know is there's going to be 3 waves. This is wave 1. This will be where retail enters. Wave 2 will be where retail starts dumping massive amounts of money. And wave 3 will be the scary phase, which people are going to start making the most reckless decisions you've ever seen in your life. And this will be the point where you need to sell. And you could probably come back into the market if you're smart. You could buy back in January, February, and then the rest of 2026 you'll be straight. And that's what I'm doing. Because I'm coming up, man. I'm becoming at least a millionaire. Now I have to pay taxes and I don't plan to take all that out, but I'm gonna touch it.
Word transitory. And the second thing is that they believe that this weakening labor market needs an interest rate cut to prevent further deterioration. Okay, before the CPI inflation report came out today, here were the odds of what the Federal Reserve would do at their next meeting on September 17th. And this is according to the CME Fed Watch tool. Before the inflation report, there was a 92% chance that the Federal Reserve would cut interest rates by 0.25% at that meeting, and an 8% chance that they're going to cut interest rates by 0.5%. So it was like a given that they're going to cut interest rates. It's just going to be a question of how much they're going to cut at this upcoming meeting. Now, after the release of the CPI inflation report, here's how the odds have changed. So sentiment, as you can see, has not shifted by much. There's now an 88.8% chance that they're going to cut interest rates by 0.25%, and an 11.2% chance that they're going to cut interest rates by 0.5%. So as I said in my previous video, I expected a higher inflation print and most likely still an interest rate cut of 0.25%, and that's what it's most likely going to be. So I'm just letting you know that when they cut interest rates by 0.25% at this upcoming meeting, it's not going to be a shocker to anybody. This is kind of expected. So what people are going to be more focused on during the press conference is how quickly, the hints that they're going to give about how quickly they're going to cut rates. When's the next interest rate cut going to be? Is it going to be in October or December or maybe even at both? But this is so important for you to know, so I want to show you this. There are 3 more Fed meetings left this year. There's the one that's coming up next week, and then there's another meeting in October, and then in December. So the updated market expectation is that the Federal Reserve will cut interest rates at each one of the remaining meetings. So the one next week, in October, and in December as well. So the market expectation is a 74.4% chance of that happening. So that would drop the Fed funds interest rate from the current 4.5% to 3.75%. So in that short time frame, that would be aggressive interest rate cuts. And that would have big consequences on the stock markets, on precious metals, cryptocurrencies, and interest rates on consumer loans and products. And we're talking about from savings accounts to credit card interest rates, etc.
You need to be paying off debt. Now, I am one who doesn't like debt, honestly, but I'll be honest, I leveraged my way pretty heavy. I'm still good, but I did leverage. So I'm gonna be honest with you. Yes, I have 100 bands, but I do owe some people. Probably about 40, 45. So I need to make a lot of money. I really don't, but I do. So I'm using all this money to pay off my debt so that I don't have to work anymore. And I'm gonna just basically just chill around and do nothing all day. Doesn't that sound amazing?
Check this out. Okay, but this begs the question, why such an aggressive approach to interest rate cuts? It's because the labor market data has been coming in terribly. Now, I covered the last jobs report and I showed you that the unemployment rate was ticking up higher. And then this week, there was a revision to the labor market data, and it was a massive downward revision of 911,000 jobs for the past year. This was the largest revision on record since 2002. So that's about 76,000 fewer jobs created each month than initially reported. So this revision includes a few months under President Biden and a few months under President Trump. So the largest downward revisions, they were in leisure and hospitality. That was revised downward by 176,000 jobs. Business and professional services down by 158,000 jobs, and retail trade down by 126,200 jobs. Okay, so in this type of setup, with rising unemployment and slower job creation, this means that we have a weakening labor markets, and the Federal Reserve wants to cut interest rates more aggressively to support the labor markets. So yes, they could do larger rate cuts at each one of their meetings to be even more aggressive, but that doesn't seem to be the case. It doesn't seem like they want to do that. But they may still choose to do that if the labor market just declines rapidly, more rapidly than they anticipate. So that was the labor market side of things. Now I want to show you the inflation side of things. Just the other day, the Producer Price Index, or the PPI report, came out. The Producer Price Index gives us insights about the inflation that producers are experiencing. If PPI is going up at a faster rate, then it's expected to pass on to the Consumer Price Index, the CPI. But the Producer Price Index unexpectedly dropped in August, and this was a big deal. And as you can see from the chart, it was a steep drop-off compared to the prior month. Now, what's the significance of this? It means that
we gotta be careful. I'll be honest with you. Keep some cash, keep some precious metals. Realistically, I probably need to do both of those things. I have a little bit of precious metal, but nothing substantial. Get a bunch of coins. Not even like gold coins, like even just quarters, nickels, dimes, and stuff, because if some stuff ever goes down, you want to have money. You want to have something you can trade with. I don't have money, but I do have stuff I could theoretically trade with. But yeah, when I get things all together, when these this was so crazy, right? I've been in this market so long that like I've literally been through a full cycle, a full 4 or 5 years of just buying and just messing around and stuff. And I learned so much, but I feel in a way it's kind of not cool because if I had known this was so artificial, I would have just waited until like right now and then just bought in, you know? I guess that's not how it works, but I didn't realize how artificial these markets really are.
If inflation is cooler, then it gives justification for the Federal Reserve to cut interest rates and maybe even more aggressively. And after this news dropped, President Trump went onto Truth Social to post this. So he said, just out, no inflation. Too late, which he's referring to Jerome Powell, chair of the Federal Reserve, must lower the rate big right now. Powell is a total disaster who doesn't have a clue. Now, besides President Trump, Treasury Secretary Scott Bessent wants the Federal Reserve to cut interest rates big as well. So I want to show you this video clip of Bessent saying that the Federal Reserve should go with bigger rate cuts. Please take a look.
Wall Street might do even better if the Federal Reserve cuts interest rates. The president was pretty clear yesterday, put out this comment, Jerome too late, Powell must now lower the interest rate. Is it reasonable to give them a bit more time to draw conclusions about what's happening here?
Well, I think what we could see is that, first of all, what if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So
I don't believe anything these people say. I swear if they're talking, they're lying. I don't listen to them. We can hear them out, but basically, this dude right here is looking out for himself all the time. And at that point, I don't even want to work with people. Like, I'm gonna be real with you. Once I become free, I'm not working with you. I don't care what deal you offer me. I don't care if you come in with a fancy suit and you have a pin on your shirt or something. There is no amount of money that you can give me to work with you.
Seeing those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September. Does that signal that the economy, though, is not doing well?
Bro, we don't need to ask that question, bro. That's what I'm saying. I'm sick of hearing the same answers. It's just the same. Nothing ever gets solved with these people. That's why it's just boring to listen to. I'm gonna be honest with you. That's why sometimes I don't want to make videos, because this dude right here, he's just gonna say the same thing we already know, and then Jerome Powell's gonna say what we already know. It's just garbage. You're lying. Everything's wrong. We just need to get rid of these people. I'm being honest with you, because they don't do anything for this country. They don't do anything.
Signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So I think
They're saying that they support 0.25% rate cuts, at least at the next meeting. And they want to be data dependent. So I want to show you this video clip of Fed's Waller.
Can we just start firing these people? Just fire this guy, fire them all. Deport them.
Monetary policy should look through the tariff effects on inflation. I've been saying this for a year. With underlying inflation close to 2%, market-based measures of longer-term inflation expectations
I don't want to hear
firmly...
what dude has to say. I just don't care. All right, I'll see you guys in the next video, man. Peace.